Hello and good morning, everybody, all of my friends around the world. It is a pleasure to be here. Welcome to the Impact Money Show. We have an exciting lineup of financial discussions lined up. Let me kick off my link here to my good friend and colleague, Mr. Matt Dixon, so he can join us here in a couple of minutes as we get going here. A lot going on today. First, let's kick off with an event that's set to blend technology, politics, and finance in a unique way. The DC Inaugural Week. Now, if you've known me long enough, you know that we throw lots of events. One of our favorite things to do. Looks like my feed is not working. Is my feed not working on X? Hold on, I may have to just do this all over again here. Why is my feed not working? All right, it's working, just not on mobile. That is a bit of a bummer, because of course most people are watching on their mobile. Let me just check one other thing here and see if that's working. We get a decent amount of viewers on X, so I want that to be working for everybody. All right, well, it appears to be working slightly. It is a little bit buggy. Nothing I can do about it. Maybe it's part of the censorship bugs in the code. Who knows? We had a good stream yesterday. It was the first one in a while that had been good. Anyway, DC Inaugural Week. My colleague Evelio Medino, my brother David Porter, and I are proud to be hosting the DC Inaugural Week at the MGM Casino here in the Washington, D.C. area here. Super excited about it. It's going to be a lot of fun, guys. It's going to be a lot of fun. If you don't have plans to come to D.C. for the inauguration, or you were looking for what to do, well, look no further. Come stay with us at the MGM. And we're doing a two-day crypto conference as well, leading up to it. We're bringing together the worlds of Bitcoin and cryptocurrency with the political fever of the Trump inauguration. On January 18th and 19th, we'll be hosting the Maga Maha Bitcoin and Crypto Conference, where we aim to explore the future of digital currencies against the backdrop of incoming political changes. The website is dcinaugural.com, dcinaugural.com. You can check it out. Get your tickets right there. I'll be doing a lot. Of course, it's coming up very, very quickly. Maybe the fastest I've ever put one of these together. If Evelio wasn't such a good friend of mine and a great guy all around, and him and I have done actually now multiple events together. Some of my best events, actually, we've done with this guy. He's a great guy, and really, at this point, guys, we've been doing this a while, right? We got this stuff. We got this stuff down. This is a golden opportunity for networking, learning, and discussing how blockchain technology can shape or be shaped by policy. Following that, on the evening of January 19th, we're excited to announce the Bitcoin and Crypto Inaugural Ball. Yes. We're throwing an inaugural ball. The Bitcoin and Crypto Inaugural Ball will be on the 19th, where we'll celebrate these insights in a setting that's both festive and historic. And here's a significant perk for attendees. The entire trip to DC for the inauguration can now be written off as a business expense. It's a perfect blend of business, pleasure, and history making. So this will be a lot of fun. Reach out to me if you'd like some more information on that. The MGM here in DC is quite nice. And one of the reasons why we chose the MGM was, of course, with all this stuff going on, The MGM is very secure. It's a very secure place. And, they got their own police force and everything like that. Will Trump be coming? Will Elon be coming? Will all these people be coming? We're inviting them. Maybe they'll come, maybe they won't. We'll see. Hold on. Now, let's delve into some of the top finance stories shaping our economic landscape, starting with corporate America. President Biden has blocked. He's blocked. Happy New Year, John Noteworthy. Good to see you, brother. President Biden has blocked the $14.9 billion acquisition of U.S. Steel by Nippon Steel, citing national security and economic strategy. The decision reflects a broader discourse on how much of our critical industries should be foreign-owned, especially in times of geopolitical tensions. Turning to the automotive sector, Tesla has reported a significant first in its history, an annual decline in vehicle deliveries. This downturn, particularly in mature markets like the U.S. and Europe, is attributed to the aging product lineup, high interest rates affecting car financing, and stiff competition from new EV players. However, it's in China where Tesla's story takes a different turn, with sales skyrocketing due to strategic price reductions and booming EV markets supported by government policies. Pretty cool, right? I know. Hold on here. So, let me just pop these prices here. I got the crypto prices. I'm going to put on our banner. Boom, 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 boom. There we go. You know how we do, guys. We're live. We are live. We're live, folks. We are live. And there's a lot to get to today. Of course, the great Matt Dixon is in the wings. He's in the wings. There we go. Check that out. And make sure, guys, down there, you hit that QR code. Sign up for 2Bit. 2Bit exchange. Sign up for 2Bit. Buy Bitcoin, Litecoin, Ethereum, all of them at cost, okay? In the broader market, U.S. stocks began the year on a shaky note with mixed economic signals, creating volatility. A strong labor market, as indicated by falling unemployment claims, contrast with a weakening dollar and Tesla's stock performance, presenting investors with a complex picture to navigate. Of course, the dollar has been on a big surge. So, yeah, sure, it's weakening over the last 24 hours or so, but it's overall it has been pushing up. It has been pushing up. Of course, that's against a basket of other currencies. It doesn't mean inflation's not through the roof. In financial instruments, we're witnessing a surge in complex financial products to levels not seen before the 2008 financial crisis, with a volume of $308 billion to date. This trend toward high-risk reward strategies could herald innovation or warn of potential market instability. The banking sector isn't immune from controversy either. Major U.S. banks are illegally challenging the banking cartel Federal Reserve stress tests, which are pivotal for ensuring banks have enough capital to weather economic storms. This pushback coincides with the discussion about revising these tests, highlighting the ongoing tensions between regulatory oversights and banking operations, and of course, the bank's stranglehold that it has on the United States, total and complete control over our money, how much is printed, buying off Congress, paying everybody. It's an absolute travesty what's going on. They have a complete and total control. Must end. Shifting to the digital currency sphere, Bitcoin has rebounded to about 96.5, marking a strong start to the year. This resurgence comes on the back of its 16th anniversary, which is today, 16th anniversary of Bitcoin. Of course, you have the anniversary of the white paper, which is actually on Halloween, and but Bitcoin started today, 16 years ago. How about that? With institutional interest growing, evidenced by significant investments like from Yuxon Technology and, of course, all the rest, the ETFs, everything else. Political figures have also entered the conversation with talks of the strategic Bitcoin reserve, suggesting a potential shift in how cryptocurrencies might be integrated into national economic strategies. In the altcoin market, there's palpable buzz about the altcoin season, the infamous altcoin season, where these cryptocurrencies are expected to outperform Bitcoin, Ethereum, Solana, and even more coins like Pepe are drawing attention, reflecting the market where speculation, technology advancement, and investor sentiment drive rapid price change. Moving to the tech giants, Elon Musk's stewardship of X has sparked a debate around censorship and free speech. His admission of throttling news links to favor on-platform content and increased compliance with government requests for content removal outlines the challenges of managing a platform that claims to champion free speech while navigating legal and policy landscapes. On a broader note, AI continues to be a hot topic, with government scrambling to regulate the fast-evolving technology from privacy to ethical use. We're seeing significant corporate moves like Google's focus on Gemini AI and the legal battles over AI's use of copyright material for training. How about how everything that we say on X is fed right into that AI? That's why Grok's so powerful, so good. You know what I mean? They hear everything. They get it. They get it all, right? They get it all. And let's not forget robotics, where we're witnessing breakthroughs with humanoid robots performing complex tasks and AI integration, enhancing robot functionalities across industries from healthcare to hospitality. In terms of longevity research, there's exciting progress with discoveries linking genetics to lifespans, new insights into caloric restriction, and innovative approaches like immunotherapy to combat aging at the cellular level. Personally, I plan to live at least to 120 years old. That's really my goal. 120, 150, really. I'm trying to take care of myself as best I can. Finally, the New Orleans and Las Vegas incidents, while tragic, underscore the unpredictability of security in our modern world, raising questions about the intersection of technology, military service, and public safety. This mix of stories from the DC inaugural week to robotics and AI, from cryptocurrency to economic policy, paints a picture of the world where technology, politics, and finance are increasingly intertwined. Stay with us as we continue to explore these narratives and their implications on the Impact Money Show. I have with me here the great Matt Dixon with our market report. Sir Matt, how are you?
Good morning, Bruce. I'm fine, thank you. Yeah, great to be with you again.
Great to see you.
I was just looking through Litecoin chart. I'm going to share it with you. It's interesting. I think part of what we're supposed to be doing here is not just telling people about where we think the markets are going, what the indicators are telling us, reporting the news. I think we're also trying to teach people to try to do this for themselves, to actually learn to analyze the market. So something a bit more than is done in many of the shows out there. Most of the shows are just news reporting. I think we hopefully go a step further and try to actually teach people to do it for themselves. And that's really part of the 2-bit initiative that you've started as well, to allow people to get involved themselves. So I'm just going to do...
What is it? Give a man a fish, feed him for a day, teach a man to fish, feed him for life.
That's the one, yeah. So I hope you can see there. I'm just messing about with. I'm on the Litecoin chart. Can you see that?
Yeah, man. I'll tell you what. I've traded had some really good trades on Litecoin.
Yeah.
So I missed out on one, man. Hit my stop loss. It just went down. You know how it is, man. I had to go to sleep. This was like a couple weeks ago. Went down, hit my stop loss, and then I was like, oh God.
Yeah.
Anyway.
So I just, as you were speaking, I actually put on the 4-hour. There's some really interesting stuff on the 4-hour chart, which I'm going to look at. But I just thought, well, in trading, the first thing you do is you look at the long-term chart. You try to get the big picture of what's happening in the markets and try to work out where it's going from there. And then you can hone in and go shorter and shorter time frame to see. But you need to get the big picture right first. Otherwise, you can be just looking at noise and get a completely wrong view or wrong picture of where the market's going.
No doubt.
So just looking from this point here, you can see I've got it labeled ABC. Now, I've got it labeled ABC because it's overlapping. You can see that this move down here has already overlapped this move up here. So it's not 1, 2, 3. It's definitely corrective ABC. So that tells me that there is some more down movement at some point likely to come on Litecoin, but we'll have a look at that on the shorter term charts. But what I would also do is the most common relationship between an ABC is what's called parity or equality, where the C wave, that's from here to here, is equal to the A wave. So when you've had an A wave and you've got an ABC down for a B wave, then you can have a target that would likely be 100% of A. So what you do is you first of all, using this little fib measuring tool, on TradingView is the one I use. There's all sorts of platforms you can use, but TradingView is really good. It's got lots of assets, not just crypto, but all sorts of financial assets that you can analyze and chart. So I measured, so just to see there, you can see I measured the magnitude of wave A, transpose it to wave B here, and you can see within a whisker, it gave us the end point of wave C. So what I'm saying is, once you saw a wave A up, and you can see the wave A was actually in, well, anyway, it's an A wave, most likely. We've got a B wave, which is very clearly 3 waves, A, B, C down for the B wave. So that is clearly 3 waves, so it's a B wave. So then I just put the measuring tool, I've measured A wave, I transpose it to the bottom of this B wave, and then right from down here, when the price was $50 for Litecoin, we can predict that it's likely to go, most likely to go to $140 odd. That's almost 3x on your trade. So when you're thinking about trading, you think about risk reward. Well, the risk is if you put a trade on here, you put your stop loss just below this low point here, just below there. So you've got, yeah, it's fairly substantial. You've got a 20% potential downside on your trade. So you don't put much of your money. 20% is a big risk on your money. So you put what you can afford to potentially lose 20% of your money. So you jump in here with a 20% stop loss or 21%, whatever, 21% stop loss, but with the opportunity and the likelihood is you're going to go to 100% extension of this wave. So 100% extension is from, as we say, $50 to $140. So almost 3x. So 20% downside to 300% upside, 3 times your money basically. So that is what we call good risk reward. Your risk is much, much smaller. In fact, in magnitude, it's what, about 14 in this case here. You get 14 times more reward than the risk. That's if the trade goes in your favor. But the likelihood is it's probably going to go in your favor because we've seen it as a corrective move down. We think it's going to move up. So the likelihood is it's going to move in your favor first of all. Then you've got something like 14 times the reward for the amount of risk you're taking. So this is how you should be trading. And as I say, you don't put all your eggs in one basket, but if you structure your trades in this way, then the likelihood is they'll go in your favor. They don't always. You can get stopped out and you lose 20% of that particular trade. But if it goes in your favor, as it should do, not always, but it should do more often than not, then 14 times the risk that you're taking is the reward that you get. And that's precisely what happens. So the price of Litecoin spiked up to there, then it's reversed down. So that's just looking at the long-term picture. I love
Litecoin. It should be. I just think it should be worth so much more. I still think I've been saying it's going to be $1,000, of course, for almost 10 years now.
Yeah, I mean it's built on the same structure as Bitcoin. So yeah, I think it's got tremendous potential. It has been left out of the limelight a bit, and maybe it should be higher than it is.
Yeah.
When it does take off, it takes off quite aggressively in some ways,
and usually sticks there. Usually, you know what I mean. It'll move 10% and then just don't short it.
It's a little bit like in behavior, a little bit like XRP in some ways. It hangs around and languishes for ages, then suddenly takes off. So, but I actually find Litecoin is more tradable. I actually find XRP is a little bit more unpredictable. I find XRP
Yes.
is one that really is good for hodlers, people who just
Yeah.
hold it because, you know, it just is very, very difficult, very unpredictable. When it takes off in a big way. So hodlers are very, very well rewarded, and it seems to have really good fundamentals. And now the SEC is pretty much put behind them. So that's why I think we've seen some good growth on XRP. But Litecoin is more predictable. It's very, very well chartable. I used to love trading Litecoin. I focus on other assets more now, but yeah, Litecoin is still a great asset. That's the monthly, that's the long-term chart, and we can still potentially go higher. I wouldn't be looking to jump in at this particular point. Well, certainly not on a weekly. Weekly is, I don't normally trade the weekly chart because one candle can be absolutely massive. I mean, just this candle here, for example, the low on it was $82 and the high on it was 420. So look at that, one candle. So that's in 1 month we had a movement of $340. So that was what, 4x movement in 1 month. So absolutely massive. That's why I say a little bit like XRP sometimes. When it takes off, it can take off in a very big way. And these on the monthly charts, these are big candles. So it can be, yeah, it can be rewarding. So again, maybe it's a good one for hodling long term. It seems to have, you know, it's got good fundamentals. Obviously, it's built on the Bitcoin model. So,
yeah, exactly. And when we say built on the Bitcoin model, guys, remember, you know, it's one of the things we talk about, freedom and the monetary revolution and everything like that. And Litecoin is like that as well. It, you know, like Bitcoin, it can't be seized, frozen, or any of these types of things. It is a decentralized cryptocurrency.
Yeah. So what I've done now, and again, this is just normal analysis that I would do. I've gone onto the 4-hour charts. This is much shorter term now. This is recent price history, and we're talking about really, you know, back what we're talking about just a month or so back, December the 4th. So you know, about a month back. So very short term price history here. So we can see from the peak that we had, $147. I don't know if you remember that. A lot of people were very excited at the time, and I gave an upside target at the time. I think I gave of $126. That was when the price was much lower. The price was languishing down at $80 or $90, $89, $90, and I gave a target of 126, and it overshot that target. But actually, that's not a bad thing. It's never good to try to squeeze the very last bit of juice out of any asset.
It's always so true.
Always good to take your profit a little bit early. So 126 I felt was a good, sensible target to take your profit. And yes, it went beyond there, but then you're starting to take big risks because the reversals can be very aggressive. Wasn't so aggressive in this case. It gradually moved down, but as you can see, it's moved down in 3 waves. So it's entirely possible that we will move, because that's down in 3 waves. And the point is, what I want to show here is the movement up has overlapped this movement down. So it's not a 1, 2, 3 movement down. If it was 1, 2, 3, I would start to worry, thinking we're going to start to move impulsively down. But it's not. It's ABC because we've got overlap here. So because it's ABC, it means the impulsive direction is still higher. So I still at some point expect new highs above this local high here of $147. So that gives me great hope for this market. And again, I haven't measured this. I can see actually it's not equality here, but I'll just measure it anyway, just to show you what I will do. When I see an A wave down like this, I'll measure it. I'll transpose it to the B wave. Sorry, it's supposed to be dragging that. Transpose it to the B wave. Yeah, it actually overshot this time. So the movement down, the C wave overshot the A wave. But even so, it still gave us a good target for profit because we saw an A wave down. We got a 3-wave movement up, so B wave. So even if you went for 100%, sorry, I will put that on again just to show you. This is just typical trading technique that I would use combined with risk reward. So I've measured that A wave. I know this is a B wave because it's ABC higher. So I put on the fib measuring tool, measured that, transposed it to the top of the B wave. And my 100% target here was $90. So basically from 131, I could be reasonably confident going short. My stop loss would be above the previous high. So relatively small potential loss, but going short, massive potential downside. So from 130 down to $90, that's 45. It's 40% or something like that. 40% move to the downside. So that again is a very, very nice trade from a risk reward perspective. So we've looked at trades in both directions here, using a bit of Elliott wave with corrective moves, ABC moves, measuring using Fibonacci measurement to project where a wave is going to go to. Now, again, we went beyond it. And as I say, that's not a problem. I'll take my profit here and be happy with it because it's 40%. 40% in a few days or a week or so is amazing. So I'll take my profit. And yes, the price went beyond, but I don't care. I've got the profit in the bag, so it really doesn't matter. Now, interestingly, I'll just remove that. Interestingly, we've had ABC down. Now, we could start to move impulsively back higher, but I actually don't think we're moving at the moment impulsively. So I think this ABC down is maybe a larger A wave. And I think we're actually going to be working on a B wave now. And the B wave can go all the way up here potentially. So right now is not a great place to jump in. It's middle of the range. It's no man's land. It's not near a barrier for price. So there's no good risk reward. It's in the middle of the range, of this range from top to bottom. If it's in the middle of the range, risk reward's useless because it's basically the same risk down as up or same risk up as down. So why would I take a trade when it's 50-50 risk reward? It's useless.
Right.
You're going to lose money.
And when it waves in the wind like this and goes down or up, depending on which way you're going, you're going to be, it's no fun.
Yeah. So interestingly, we've seen a movement up and then a movement down, but interestingly, the movement up here also overlapped this movement down here. So overall, this is a corrective move. So middle of the range, I wouldn't be interested in trading this asset right now. So whilst Litecoin has amazing opportunities, I always look at assets. I'm searching for good risk reward. This does not have good risk reward. So this is a great lesson for me in terms of how to trade an asset, how to pick an asset to trade. So right now, Litecoin is not it. Whatever potential it has, it might have amazing potential. It doesn't matter. If it's middle of the road, I'm not interested. So let's move away from Litecoin. Let's just go to the dollar. You're talking about dollar this morning earlier. Yes, dollar's had an amazing run, hasn't it? I mean, we saw the pound dipping right down. We dipped down yesterday to 123 something. We're 124 today, almost on the button 124. So the pound has shown a lot of weakness against the dollar, and that is reflective of the strength of the US economy, the optimism of the US economy with Trump coming in, and there's a lot of optimism there right now. The fact that the US are now scaling back on those interest rate cut expectations. As we said, they were looking at 4 cuts next year. They're now scaling back maybe only 2 cuts. So because there's going to be fewer cuts in the interest rate in the US, then there's less interest, less desire to hold the US dollar. There's going to be more, because there's less interest rate cuts, there's going to be more desire to hold the US dollar. So that's why we've seen a bit of US dollar strength, and we've seen the pound is the opposite, weak economy. No one wants to hold a weakening economy where they need to lower interest rates more, so they don't want to hold the asset. So that's why dollar is strengthening against the pound and against most other assets. And even if we jump over to Japanese yen, the Japanese yen is looking very weak at the moment against the dollar, because even though the yen are looking to raise rates, the fact is the dollar are looking to cut rates less than expected, and the US economy is still looking relatively strong. So there's good reason to hold the US dollar right now. But interestingly, I think that I've got this labeled as wave 3. If I put on what I think is probably a wave 4 down here, I don't know what. Let's just put on where I think the wave 4 somewhere down here. Yeah, it doesn't matter what size it is. So we've got wave 3 up there, wave 4 down there. They're the same cycle. Then we're looking at a 5th wave high. The 5th wave high should go beyond the top of wave 3, which it has beautifully. But interesting, we've got wave 1, wave 2 down, wave 3 up here. This is a typical wave 4, choppy sideways movement, wave 4. Wave 4 there's actually a rule of alternation or a guideline of alternation when you get a simple wave 2. So wave 2 here was a simple sort of ABC, very short, choppy movement here for wave 2. So wave 4 is normally in alternation. So we've got more of a sideways movement for wave 4, which is very typical. It's a good, a reasonable expectation. So wave 4 may still chop on dollar yen. So after the wave 4, we'd expect a further wave 5 to the upside. That would finish the larger wave 5. So we've got the larger wave 5, but within it, we've got 5 waves, 1, 2, 3, 4. We're working on now and 5 up. Once that's finished, we should then see yen strength, dollar weakness, money flowing out of dollar, out of all risk assets into the yen strengthening. So money, the carry trade will be melting away. So risk assets will be melting away. Money will be flying back into yen to repay cheap yen borrowings. And that's when we'll see a reversal in the market, but not yet. So come Monday, we're going to do a proper analysis of the world markets to get an overall big picture view of where the markets are going. But I'm just showing you, even on the smaller time frames, we can see pretty well where the markets are going now. We've got a wave 3, a wave 4. We're not finished on this wave 5 up yet. So that means the markets are not yet finished to the upside. So we are going to see, we talked about, is 108 the top on Bitcoin? No, it's not, I don't believe, not in my opinion. We're going to see another all-time high for Bitcoin. We might see some more downside short term, but we haven't finished yet to the upside. But following that, when we do see the final, when I say final, I mean in this cycle, upside, new all-time highs for Bitcoin, we're going to see some big downside because this carry trade is going to really start to unwind, as they say. And don't forget, the Japanese have said they are going to raise interest rates. So everybody else, even the US, is looking at cutting rates. The Japanese are looking to raise rates in the first quarter of 2025. So this quarter that we're in right now, the Japanese are going to raise interest rates. That, as we've said before, is going to set the cat amongst the pigeons, and it's going to cause that carry trade to unwind. So just beware, know what's happening in the big picture behind the scenes, and be ready for it. And you can be ready for it by analyzing the wave structure of the market and just be ready for it. So we're not yet finished on the move up, on the wave 5 up. So I'm not worried too much about the markets at the moment. Despite all the geopolitical issues, it's weird, isn't it? We've said so many times that the market structure will tell you what's going to happen, tell you something's going to happen, and then an event will slot into place to make it happen. So I believe there's going to be more geopolitical issues, particularly in the Middle East. And as I said yesterday, this Syria issue has not gone away. It's actually just setting up for a major flare-up. And, mark my words, I'm coming out here and saying there's going to be a major flare-up, sadly, because we hate to see the human suffering that goes along with all these geopolitical events. But from a purely financial perspective, we're just aware of what's happening, and I think there's more to happen there. That flare-up is going to cause a big sell-off in the markets. But again, I think longer term, we're going to see some positivity, and whether it's associated with Trump. I think Trump is going to do some amazing stuff because he's talked big. He's got to deliver something big, and I think he's going to deliver something big in terms of a peace process. Personally,
I agree. I mean, say what you want about the guy. I absolutely agree. And that feeling, that optimism is shared by a lot of people. And, if you believe it, and if people believe it, then it is much more likely to happen.
Yeah. And, Carter did some amazing stuff. Trump he always wants to be the biggest and the best. So I'm sure he's got to come out with something absolutely amazing on the peace front. Not just, but there's Ukraine, Russia, there's the Middle East, and I think he's going to do something on both fronts, which is going to be really spectacular. I think we're going to see a massive market rally off the back of that, with new all-time highs coming everywhere. But following those all-time highs, that's when we're going to see some problems bubble through. So that's dollar yen. As I say, we've got some warning signs coming once we've got that wave 5 higher. It's not yet, but I think these problems might actually filter through probably sometime toward the end of the first quarter. So I still think there's some optimism ahead, even though we see choppiness because we're in a wave 4. We're going to see some euphoria probably towards after Trump is inaugurated. We're going to see some major euphoria again pushing the markets higher, but following that, I believe we're looking at end of first quarter, but we'll analyze that in more detail come Monday, perhaps when we look at the big picture of world markets. So we'll just dive into, well, might as well have a look at SPX. Even SPX here, we actually did touch another low, so we could have completed ABC to the downside, or we may have a bit lower to go. But I said even when we started up here, we had this bearish divergence in place telling us a downside. We actually had some bullish divergence, hidden bullish here, telling us of some upside for the B wave. And then we got some more bearish divergence on a different time frame, actually. We got some more bearish divergence telling us of the C wave down. Now, the C wave has fulfilled what I would expect for it. It's gone beyond the A wave. I still think it may possibly go a bit further. So I still think we may see some more downside just to complete what I would think is a more respectable C wave, maybe a bit more downside to come, but we're there or thereabouts. So we're not far away from reversing back to the upside again. I think we're going to see some new all-time highs relatively soon for the SPX. So we've seen some reasonably strong sell-off there. I think there's probably a bit more to go, but we've got more upside to come at some point. Or we could see the C wave. We're not even equality yet with the A wave. So remember I said that the C wave, most common relationship is equality with the A wave. That would still take us a bit lower for the SPX. So I'm still thinking we're going to see a bit lower, but we could even see there's another, whilst 100% is the most common, we can also very often see 1.618. So if it was 1.618, we'll just put where that could potentially take us. We measure the A wave here, which is somewhere around about that. Transpose it to, I think the B wave somewhere there. 1.618 would take us potentially quite a lot lower. So 100% is expecting lower. We're currently on 5,900, I think, 5,868 on the S&P. 100% would take us to 5,790. That's the most common relationship. That's where I've got C labeled here. But we could go beyond it and go lower even to 5.6. But if we talk about dollar cost averaging, don't throw everything in one go. If we dip to this 100% level, I would buy some of it. Dollar cost average, use a bit of your capital to buy some of the S&P here. But then if it dips lower, I'd dollar cost average and buy some more at 1.618. So buying at different levels, so you're not exposed all at one level. And then if we see reversal, when you get beyond back above this level, you can start to put some trailing stop losses in to guarantee some profit. So I'm just saying there's downside risk at the moment. So again, be cautious on what you're investing in. Touching on Bitcoin, obviously it's a big one. Bitcoin, again, really interesting because we've had what I think was a wave 5 ending diagonal. So we're looking at this cycle down. We've got an ABC wave there. I actually think we've got some kind of ABC movement down, but I still think we're in corrective mode because this movement up to here, where I've got this red line drawn across, I put a line at the top of this move here. Now the movement we've just had moving down has already crossed below that level. That means it's not impulsive. So it's not 1, 2, 3. It's crossed below it. So I still think this is a corrective move up. So I think we're seeing ABC up, ABC down, and maybe we'll see ABC up, or maybe we'll see 5 waves up to finish this wave before we see some more downside. So I don't think the downside is yet complete for Bitcoin. So we may see more short-term upside, but I still think we're not going to rush straight to all-time highs. I think this is going to be a larger correction in the form of A, B, another C wave down. I've told you for ages I'm targeting probably the 84,000-ish area, maybe 84,000 to the downside for Bitcoin. So I don't think we've completed the correction yet. But following that, I believe we're going to push to new all-time highs above 108,000. But right now, just like Litecoin, we're almost middle of the road. We're 96,000 now. We had a low point here of 91,000. We've got a high point of 108. We're virtually in no man's land. Risk reward is not amazing. I wouldn't want to take a trade unless there's at least 2 to 1 risk reward. In other words, the risk is half the potential reward.
Yep.
So for me, this is middle of the road. So I'm not looking to jump into trades right now. And again, you don't have to be trading all the time, but let's just jump into one that has gone precisely according to plan so far. Solana, I've tracked it really closely. We had a W wave down, which is made up of an ABC for the W wave. We had an A, then we had a triangle B wave. So I said after the triangle, you expect an impulsive push to the upside, thrust out of the triangle. Precisely what's happened. I've got a target of 216. We're already 214. So it could even go beyond there, but that was expected. So triangle, as we say over and over again, is a pre-terminal wave in the cycle. The final wave, the thrust out of it, is the terminal wave, and it's normally very powerful. And look at it, it's absolutely what we've seen. And we had this labeled before it happened. So it's amazing. Before it happens, we've got it labeled. So we're expecting this. A triangle is the most predictive chart pattern, in my view, that there is. So when you see a triangle, you know there's going to be 95% certainty, in my view. So one of the most reliable chart patterns, there's going to be a thrust from the triangle. So this is a great place to load up. You know that the E wave can overshoot this trend line, but never by much, maybe 10%. So you've got a great risk reward here for a massive thrust to the upside. And that's precisely what we've seen here. Solana is absolutely on fire right now to the upside, but I believe it's a terminal wave. Being a terminal wave in this cycle, and the cycle is made up of A, B, C, making up a larger X wave. That's the cycle. So then following it, you expect a substantial move to the downside. So whilst this thrust, everyone's going to be jumping on it. Wow, Solana's breaking out, it's breaking to the upside, but we expected it before it happened. We expected this terminal wave, powerful terminal thrust to the upside before it happened. So we are waiting for it to be the final wave in the cycle. We're waiting for reversal. So most people will be jumping in long, trying to jump on the back of this, retailers particularly, thinking, wow, it's breaking away to the upside. I want to be on this trade. They jump in, but then we're going to see, I believe, quite a sharp reversal to the downside. So let's just see.
Is your target still 216 on that?
That's the target. I mean, we can go beyond it. So if you jumped in down here, risk reward was great. So you could have jumped in at 188, would have been a great place to jump in. My target, my take profit would be 216. I'd just take everything off the table personally. Or you could just protect it somewhere below and maybe leave it to run. But I think we're going to see, because I think it's a terminal wave, I think we're going to see a sharp reversal. So that will be my take profit. But it can theoretically certainly go beyond that. So that's the 100% of this A wave. So I measured the A wave here, transpose it to the end of the B wave, which is labeled here, and then the 100% is 216. It can go to 1.618. It could go to 234. It could go higher, but that's my ideal target is 216. That's what I'm looking for.
And remember, guys, if we are going into if we're going to continue the downward trend for a little while, it would make sense that we push up today, we push up to the weekend as the liquidity becomes lighter, pushing up, and then we start our downturn.
You stole my words again, Bruce. That's exactly what I'm thinking, because I've always said this holiday period, and we're still in the holiday period.
Yeah.
I know we're in the new year, but most people. Oh
yeah, no. One of my kids is still out of school. The streets are empty. Trust me, here in DC, people are not here.
So everyone gets back to work on Monday. So that's the time that the markets get back to normal liquidity, etc. So this is still just the holiday thin liquidity move, as far as I'm concerned, and I think we'll see reversal come next week. So that's my thoughts are we're probably going to see reversal next week. Maybe even beginning this weekend, who knows? But yeah, we've had this holiday period. It's precisely what was expected. As I say, we had downside before the holiday, the quiet holiday period. And as I say, out of 40 years of trading, I've seen this so many times. The Christmas festive period moves against the prevailing downward trend here. And you can see it's been moving down from the all-time high for a long time now. Holiday period, it moves up. And then after the holiday period, we resume the downward trend to finish this overall correction. Then after that, we're going to push to new all-time highs again for Solana. You can see the arrow I've got in here. So once the correction is complete to the downside, then I think I'm going to push to new all-time highs. So those people who are hodling Solana long-term, no problem, I don't believe. I think we're going to see new all-time highs yet again. But shorter term, I think this is just an ABC correction that we're seeing at the moment, and we're going to see further downside to come. So that is quite a powerful prediction because it's against what most people are expecting. I'll just whiz through the other assets because I know I tend to go on quite a lot, but it's exciting. I think it is good stuff. Yeah. So again, we can just see Ethereum. It's very choppy sideways. We may get a little bit more upside, but I think this is a correction, and we're going to see more downside to come with Ethereum. So I know there's a lot of optimism around Ethereum, but again, like a lot of assets, I think we're just setting up for a reversal. And just going back to dollar index very briefly, I think the same for dollar index. We've seen a lot of optimism, but we're going to start to see that optimism fade away, and we're going to see weakness in the dollar come reasonably soon. There's been so much optimism for it that we are going to see it. So let's jump over to oil. Again, that's a prediction we made, a very accurate prediction that was made right at the lows of oil that we saw way back when it was $66. I said, everyone's saying there's no, oil's going to go down and down. This is the time. I said, I can remember clearly saying on this show that I'm optimistic for oil. It's going to be pushing higher. And look at it, from $66 or wherever it is, even lower than that, wasn't it?
It was lower than that, yeah.
Yeah, so I mean, back here it was $65, yeah, and we're now at $73. So I thought there was going to be a push higher in oil. Oil's going to be choppy. It still looks very corrective, but that was precisely, again, an amazing prediction. I think we've had some really good ones. It would be good if we went through all the shows and looked at the predictions. I think we've got very, very few wrong, if any, virtually. But we've got a lot of good predictions which have really played out, and that's because we're not looking purely at technical analysis. We're actually combining technical and fundamental analysis. And for me, that's the way to trade, because if you're trying to trade on one thing alone, technicals, and avoiding fundamentals, you've only got half the picture. You haven't got all the jigsaw pieces. You can't see the whole picture. The whole picture is made up of lots of different elements, lots of different pieces. So you look at as many pieces as you can to get the clearest picture possible. And that is absolutely definitely, I believe, the way to trade. We'll just flip through a couple. Again, we've got ADA, Cardano, which is a very popular asset. Again, we've got 3 waves down. I think we've got 3 waves up. Look at that. We had a target of 100%. It's just reached that target. So I think we're due for reversal again. Probably a substantial reversal. So again, it just fits across the board, across the picture. I think that's about it. We'll just finally, we mentioned that Tether, whilst it's supposed to be tied to the US dollar, is actually interesting trade opportunity. If you've got high frequency trade with low costs, very low commissions, you can see there's actual in a stable coin, which is supposed to be tied to the US dollar. Some people trade this using high frequency trading. They usually use computers to trade it because the movements are often very, very quick. As you can see by these spikes, they're very, very quick, and they can't be really caught manually, but you can do arbitrage. You can do even just high frequency trading. In a stable coin, there are opportunities there. So again, we touch on all the different types of trading that you can do within the financial markets, and this is just another example. So that's it for today. A lot of work I'm going to be doing this weekend on finalizing the presentation for the year ahead, what the long-term expectations are. And then also, I think next week I'm going to do a deep dive into Bitcoin and look at some on-chain metrics for Bitcoin. We use, among others, we use Glassnode, who do a lot of analysis of on-chain. That's basically looking at the movement on the Bitcoin chain of assets on the chain, and there's a lot of interesting data you can get from that, which gives insights as to the real fundamental power behind Bitcoin, how it's got some real solid fundamentals. So we'll look at that as well next week. So lots of exciting stuff ahead of us next week. So that's it for today. Thank you everybody for listening. Thank you, Bruce, for the opportunity, and look forward to catching up. Have a great weekend.
You got it, my friend. Have a great weekend as well. I'm taking the family skiing, so we're gonna have a good time.
Lucky guys. Thank you. All the best. Bye-bye.
Cheers. The great Matt Dixon. Sir Matt with the Market Watch Report. I'll tell you what, it is absolutely, I say it all the time, world-class analysis that we get here. It's world-class analysis that we do here And hopefully, if you guys have been following the signals, you're able to profit off of some of that. Of course, you can join 2Bit, follow that QR code there, join the 2Bit exchange, and you can follow our trades as well with the copy trader function. Just reach out, and I will help you get set up with that amazing exchange. You can it's available for U.S. Customers. Everything is popping here pretty well. I got my thing open here, and you can see, of course, where the prices running down here. Those are current, at least to the last 10 minutes or so. Solana, speaking of Solana, popped up to 215 on 215, and then now back down to 213. We'll see how the day rolls out. Dow futures. Let me just look at Dow futures real quick. Dow futures is usually a pretty good indicator to how we're going to do today. Dow futures up 64. It's not definitive. I mean, it's up. We could have a real nice day. We'll see. We'll see how it all rolls out. But still stand by what Matt and I said, as where things probably continue to float up. They may continue to float up through the weekend. And then as Sunday rolls around, we could see a sharp decline. Anything can happen, though. You know what I mean? That's what it's set up for. That's what it looks like to us. But anything can happen. A lot of factors to go into. We can use this stuff and say, okay, it should do this. Now, of course, something big happens and then all bets are off. That's the way it works. So it's a lot of fun. But as long as you manage your risk reward, you can really do well. I wanted to talk just real quickly again before I go about the DCinaugural.com inaugural week. I'm going to share my screen here so that you can see this. If you have not made plans yet, but you want to come to DC and you want to come to the inauguration, well, here is a really good chance to do it and to be with people that you know. Obviously, some of you guys I know, we've met in person. A lot of people. People used to ask me, Bruce, why do you follow so many people on your X? Well, because I know those people. You know what I mean? We know each other. We're friends. We talk to each other. I don't get that as much anymore, but I used to get it a lot. DC Inaugural Week. It's the first time we've done this DC Inaugural Week. We have the MAGA and Maha Inaugural Ball and Conference. 2-day conference, January 18th through 19th. Okay? You can bring your projects. This is going to be at the MGM. Okay, the MGM, which is a very nice venue here at the National Harbor. National Harbor is absolutely beautiful. We'll have the Crypto Inaugural Ball. I'm calling it the Bitcoin and Crypto Inaugural Ball. And that is actually going to be on the 19th. Okay, so we're going to have our own inaugural ball. Now, just so you know the way it works, the main inaugural balls will be on the 20th. So Trump gets inaugurated on the 20th. So the way this will work, on the 18th and 19th, we have our crypto conference. Okay. And then let me see here. I tried to deposit. All right, my friends. You can do it. The process is actually pretty easy, especially if you might need to send crypto to deposit. Just hit the deposit thing, and then you'll be able to do it. Try again. If you're not able to do it, then let me know, and I'll help you out. So the inaugural event. It's going to be fun. So we'll see. Look, guys, we'll see. But everyone's going to be here. Okay, it's at the MGM. It's a great guy. Avilio's a great guy. My brother David is a great guy. You guys know us. The ball is going to be a lot of fun. So the main balls, like I said, are going to be on the 20th. So Trump gets inaugurated on the 20th. So we have our 2-day conference, 18-19, and then we do the ball. Okay, we have our ball on the 19th. And then we all go and we watch the inauguration of President Trump. We all go, we watch the inauguration of President Trump. We're there. And then if you want to go to one of the balls that night, one of the bigger, more established balls or whatever, then you can do that. And you're probably going to want to. And then we'll probably do some VIP after parties and stuff like that. Yeah. I'm talking to Johnny here. Buy the crypto on another platform and send the crypto to boom. That's how you do it, my friend. It's actually the I'm sorry, Johnny, to deposit on 2bit. I believe it's actually the credit card processor that is the issue there. So just get the crypto on buy the crypto on Coinbase or one of the other things, and then send it over there, and you'll be able to deposit on 2bit. So this is going to be a lot of fun. Of course, here we are. Myself, I'm the host committee here. My brother, David Porter. We've thrown multiple events with Evelio Medina. This is Evelio Medina right here. He's a very good guy. President of the Downtown Miami and Brickell Chamber of Commerce. Champions economic innovation and community empowerment. Sophia Eric is one of his people there that's helping out. If you'd like to be involved as well as part of the host committee, let me know. It's going to be a lot of fun. It's going to be a lot of fun, guys. It's going to be a whole lot of fun. So again, 18, 19. So it's a DC inaugural week, right? You can't just come in here for I mean, you can, of course, for a day. And I don't know if you've ever been to an inauguration, one of the presidential inaugurations, but it is absolutely, it's an amazing process. If you were there for Trump's first inauguration, I was the guy that yelled, "Lock her up!" It was like a quiet moment with the crowd. My wife wanted to kill me. I'm lucky she puts up with me. Actually, she's lucky to have me. Anyway, it's going to be a lot of fun, guys. DC inauguration. DC Inaugural. DCinaugural.com. Let me just put that up here so everybody can see that on one of the banners. DCinaugural.com. For more information, you can obviously just reach out to me. It's probably your best bet. DC Inaugural. DCinaugural.com. Love to see you. If you're a crypto company, you want to reach a lot of these important people that are going to be here, this is an excellent opportunity. And like I said, that makes the whole thing a business expense. The whole thing's business expense. Your whole trip for the inauguration, the historic inauguration of President Trump, 45 and 47. I mean, I'll tell you what, I don't know. I wasn't sure if he was going to win or not for quite a while there. I didn't know. I don't know about you guys, but they could let this guy win. Well, he pulled it off. We pulled it off. And he's going to be inaugurated. You should be there. The other thing about the MGM, where our conference will be, our conference and ball, is a very safe environment. I know I mentioned that at the top of the show. Very safe. They have their own police force, this and that and the other. So it's going to be awesome. All right, that's it for me, guys. I am out of here. We will be back on your TVs in a few hours. And I hope you enjoy your weekend. See you Monday. Actually, I'll probably see you before that. Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.